Hello, and welcome back to Explain the Charts. Today, June 10th, 2025, we're taking a close look at GBPUSD, examining both the current news landscape and the technical charts to help you make informed trading decisions. First, let's dive into the latest news headlines. Recent reports indicate the GBPUSD pair is under bearish pressure, trading below 1.3500, mainly due to disappointing UK employment data. The ILO unemployment rate has risen, and wage inflation has softened, potentially leading to further Bank of England rate cuts. Meanwhile, optimism surrounding US-China trade talks is boosting the US dollar, adding to the downside pressure on GBPUSD. Now, let's shift our focus to the charts. We'll start with the daily chart to get a broader perspective of GBPUSD's price action. Looking at the one-day chart, we can see the overall trend in GBPUSD over the past several months. It's important to identify key support and resistance levels on this timeframe. Let's narrow in on the more recent price action on the one-day chart from January 2025 onward. We can see a pattern of volatility and sideways movement prior to the most recent down move. It looks as if GBPUSD has tested these prices and broken lower, possibly pointing to further downside. We need to look at shorter timeframes to get more clarity on what's going on. Switching to the one-hour chart, we can observe more granular price movements. We can see it has generally been in a downward move since the end of May. Zooming in on the last few days, can we see the market has generally traded sideways before breaking further down, and we can see some attempts to recover. Let's examine the 15-minute chart to pinpoint short-term trading opportunities. Here we can see recent price action in much more detail. Recent candles show some consolidation after a fall, followed by another fall. It is important to monitor upcoming news releases, such as the US CPI data due tomorrow, June 11th, as this could significantly impact the dollar's strength and, consequently, GBPUSD. In summary, key price levels to watch are 1.3500, which acts as a significant pivot level. If the price breaks above this level, we might see a test of resistances around 1.3540 to 1.3550. However, failure to hold above 1.3500 could lead to support tests at 1.3400 and 1.3360. Given the current bearish pressure and the likelihood of further BE rate cuts, I'm leaning towards a test of lower supports, 60% probability. However, positive news from US-China trade talks could provide a short-term bounce, 40% probability. Remember to always manage your risk and conduct thorough research before making any trading decisions. Thanks for tuning in to Explain the Charts. Hope you enjoyed this analysis. See you in the next video.